Disney stock is reporting earnings November 13th. The stock is down 12% in the past 5 years. In this video, we'll see if this is a good opportunity to buy the company by looking at the fundamentals and running a discounted cash flow model to estimate Disney's intrinsic value and potential future returns. Starting with the financials, Disney has seen good revenue growth over the past decade, growing from $52 billion to $94 currently, which is a compounded annual growth rate of 6%. Analysts are expecting revenue growth to decrease a bit in the next few years, as they are expected to make $95 billion this year and grow to $111 billion by 2030, which is a compounded annual growth rate of 3%. I believe they can get back to that 6% growth because if we take a look at revenue by segment, the entertainment segment is growing very nicely, and parks and experiences, although they logically took a hit during COVID, have nicely recovered since then and are now at all-time highs. Also, total subscribers took a hit in 2023. It has also been growing nicely in the past 2 years, and revenue by user is also increasing. Regarding profit, it took a big hit during the pandemic. However, it has recovered and they are now back at levels they were doing before. And net income is currently at $11.5 billion. Free cash flow has followed a similar story and it is also currently at $11.5 billion. Analysts are expecting profit to continue to grow. Regarding EPS, they are expected to make $5.93 per share this year and grow to $7.85 per share in 2030. If you assign a 20p to the company then, it would make it a $157 stock, meaning 40% upside from current levels. However, I believe analysts are being conservative because their margins are recovering. Gross margin is currently at 37% and it used to be around 45%. Profit margin is at 12% and it used to be 16%. And the same with free cash flow margin. Then, in order to calculate the intrinsic value of the company, I use my spreadsheet. This tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $81 per share, middle $135, and high $213. And because the stock is currently trading at around $112 per share, this means that if my low assumptions occur, you would get a 4.1% annual return on your money, middle 13.5%, and high 22.4%. By the way, these returns include the dividend, which currently has a yield of 0.89%. And the dividend appears to be safe, as the payout ratio, which is what percentage of the profit is used to pay the dividend, is only 15%. As far as my assumptions, I assume Disney grows revenue between 3 and 9%. Over the next 7 years, they average a profit margin and free cash flow margin between 10 and 16%, and I assign the PM price to free cash flow at the end of the 7 years of 16, 18, and 20. But if you want to make your own assumptions, I'm going to leave a link to the spreadsheet down below. It is super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. Moreover, Disney is trading at a PM price to free cash flow of 17. Therefore, we can conclude that the company is trading at an attractive valuation. Disney has an okay balance sheet with $5.37 billion in cash and $42 billion in debt, which is manageable for a company that has a market cap of $201 billion. And in conclusion, I believe Disney is a fantastic company with one of the best moats out there. The fundamentals have recovered since the drop during the pandemic and the valuation looks very attractive. But because I am being extremely picky with the stocks that I buy, because of the overvaluation of the stock market, I am personally going to wait for a better entry point, which could happen after earnings. Lastly, if you want a discount on stockanalysis.com, the best site I found for stock data, grab my code in the description. I hope you found this video valuable. Let me know what you think about Disney stock in the comments, and I'll see you in the next one.